Good afternoon once again, ladies and gentlemen. Hope that you enjoyed the lunch provided by a wonderful conference center staff. We certainly appreciate their hospitality this afternoon and the great presentation. That was very insightful, and we're thrilled to have Joey back on our panel to discuss tax policy here in South Carolina. Let me give a brief introduction. Gentlemen, I'll have you each talk just briefly about your name, your title, and your interest in this discussion about property tax reform today, and then we'll dive into our conversation with a few questions. We are delighted to have with us Bob Morgan, President and CEO of the South Carolina Chamber of Commerce, Dr. Joey Van Nessen from the Darla Moore School of Business, Scot Slatton from the Municipal Association of South Carolina, Owen McBride back with us as well from the South Carolina Association of Counties, and Nick Kremydas, CEO of the South Carolina Realtors Association. Thank you all for being here. Bob, I'll start with you. Just a brief introduction and overview about why you think this is such a critical issue.
Well, thank you for the opportunity to be here, first of all. From an economic development perspective, we really start with the number that as fast as South Carolina is growing, arguably the fastest growing state in the country, we have 100,000 jobs that are unfilled. We have a labor force participation rate that is below the national average. And the question, what is it going to take to fill those jobs so that our economy can realize its full potential? And certainly housing is one of many items that go into that we're here to talk about today, but may use the opportunity to mention some of the other variables that affect that as well. But thanks for the opportunity to be with you today.
Absolutely. We look forward to it. Thank you so much. Joey.
I would say that when we look at housing, it's such an important component of the economy and such a significant driver. So if you look at housing, both in terms of construction as well as all housing-related services, we're talking about 17 to 18% of GDP that comes from the housing industry. So getting housing right and making sure that we're in a position to continue to see the industry do well and benefit residents of South Carolina is critically important. And getting back to these drivers of demand, we're going to see more and more population growth. So this is a more important issue now perhaps than it's ever been to make sure that we get this right and answer these questions appropriately.
Thank you so much, Scott. Building on our conversation earlier, the aspect that property tax reform plays in all of this.
Judi, I don't know that I will get any disagreement amongst this group here, but none of us like Act 388 because of the effects that it's had on our housing, on the stability and the dependability of being able to anticipate what your housing costs might be within a reasonable limit. And I know we'll talk more about how Act 388 has created some of these problems. As far as solutions, we at the Municipal Association have some ideas, but along with probably many other people in the room, you've got ideas about how to reform our property tax system that no one seems to be interested in. I think everybody in the General Assembly, maybe not everybody, but many in the General Assembly, particularly today's legislators, would largely agree that Act 388 needs to be addressed to deal with some of the problems that it's created over the years. But whether or not there's the willingness to do that is an open question at this point. But we can talk more about that later as we get going.
We will indeed. We'll definitely dive into the Act 388 concerns and issues and impact, unintended and otherwise, that it has had. But Owen, I know passionate topic for you as well regarding property tax reform.
Sure, and I don't know if it's obvious by the amount of hair on my head, but I was not in the General Assembly in 2006 when this act was passed. I was actually still in college, but ever since I started working up there as a lobbyist on behalf of counties, that has been the elephant in the room. It gets brought up every year, but there's really no formative effort to fix it. There's talks behind closed doors, but to this point, no potential solution has been put forward that at least gets half or some of the interested parties on board. So I look forward to the conversation and hoping to get something out of this that we can take back to the State House.
I hope so as well. Nick, to you, from the Realtors Association perspective, biggest concerns regarding property tax reform?
Thank you, Judi. I may have been the only one here who was actually in the lobby when Act 388 was passed. I'm in my 30th year with the Association of Realtors, and Realtors, don't just sell homes, we sell communities, and in order for communities to grow and thrive, we need a variety of economic growth and other factors that weigh in: education, healthcare, open space, conservation. All those things are important. And we have a very fast-growing demographic of first-time homebuyers in our Hispanic communities, African-American communities, and they're being left out of that home ownership picture. They're not able to afford to live close to where they work, which puts stress on infrastructure and everything else that goes into municipal and county planning. And this has to be a partnership effort going forward to address this. So I look forward to the conversation, and thank you for having me on the panel today.
Well, we're delighted to have all of you with us. Before we take that deep dive into Act 388, let's start with this question from our outline about the underlying principles of sound tax policy, being that they include being equitable, being efficient, being stable, and transparent. Bob, I'll start with you because I know the Chamber event held earlier this year talked a lot about this with South Carolina tax policy. So the question is, does South Carolina uphold these tenets? And if you believe there are vulnerabilities, where are they?
Well, I would add to those tenets, are they competitive? Competitive with the states around us. And we've seen tax reform, comprehensive tax reform in North Carolina, in Georgia in the past decade. Arguably, they are more competitive than we are. We tax, the corporate tax on property is higher than in the states around us, in large part because of Act 388. The way we tax rental properties, I'll share one example of, this audience will likely know more about the subject of build to rent than I do, as developers building neighborhoods for young couples for rental. One anecdotal example of a developer who did such a project in Chattanooga, Tennessee. He did a project in the upstate here in South Carolina. In Chattanooga, the property taxes represented about 7% of the gross rental income that the market would bear. In the upstate of South Carolina, it was 25% and prohibitive. And so that developer has said, I'm going to develop in Tennessee, I'm going to develop in other states, not in South Carolina, and that's a lost opportunity for us from a competitive perspective.
Absolutely. Nick, I'll come to you because he mentioned some of those issues regarding property taxes and the competitive nature there. When it comes to South Carolina sound tax policy, that it be equitable, efficient, stable, transparent, and competitive, do you believe South Carolina is upholding those tenets, and what vulnerabilities may we have?
Well, we got to go back and look at how Act 388 came about. One of my old law school professors used to say, bad facts make for bad laws. And that's kind of where we were. We were in the height of an economic boom. Literally on the front page of the paper, there were widows who were losing their home to property taxes. Legislature had a knee-jerk reaction that resulted in legislation that had good and bad consequences, right? And I believe that there is a general understanding, like Scott said, in the legislature, that there is some inequities, some problems that need to be addressed. But I also believe that it's going to take another recession-type event to make them act to do it, unfortunately.
Scott, you agree with that?
Yes.
Yes.
Sadly, unfortunately, that's correct. Nick mentioned that grandmother was getting taxed out of her home. At the time, I was a city manager at the time when Act 388 was going through the legislative process, and not only were my colleagues and I telling our legislators, hey, there are ways to address that specific issue, somebody being taxed out of their home, that because of the growth in the value of that home, there are circuit breakers that were proposed then particularly by Senator Jim Ritchie from Spartanburg, that would have accounted for helping someone in that situation. But unfortunately, as Nick said, there was this huge outcry that we do something, and so the General Assembly, in a knee-jerk fashion, I agree, passed a bad law modeled on other efforts across the country. Colorado comes to mind. They had a similar type of legislative scheme, property tax scheme, that they eventually went back and addressed again to deal with some of the problems that we see manifested here. But now we're, almost 20 years into this, and from the city perspective, with regard to the revenues and how to deal with the problems that Act 388 causes from a taxation and a revenue standpoint. Some of my members would probably shoot me for saying this, but we've pretty much kind of gotten used to it now, and we've learned how to deal with it. But in terms of the equity of the system across all classes of property, I don't think it's equitable at all. I mean, Bob just mentioned it. We have a higher commercial property tax assessment rate than we do the owner-occupied. Then you've got agricultural property and some manufacturing property. It's assessed at 10.5%. Sound tax policy is a wide base and a lower rate, or the more people you have paying in, the lower you can set the rate and get the same or near the same results. That's where we ought to be looking, but what crisis might befall us, as Nick suggests, I don't know. But I think something consequential would have to come along, as he suggested, before the General Assembly takes any action.
Well, Joey, let me bring you in on that front, because you talked in your presentation about the potential soft landing and that we're not out of the woods yet regarding a recession. I guess a two-part question in terms of your expert assessment in terms of what brought us to Act 388, and then if you think it will take some sort of crisis, recession or otherwise, to be able for the legislature to self-correct.
Well, I would generally say yes. I don't disagree with anything that's been said so far, and normally we do see more motivation to act when we are in some form of crisis or have a lot of immediate challenges that we're facing. But I think I want to go back to this discussion about stability, and one of the things that we've been very fortunate with is that we haven't had a significantly long economic disruption really since the Great Recession. I mean, even with COVID, we saw a very rapid recovery. And so in a very real sense, we've had fairly stable economic growth over the past 15 years. And in many cases that can cause individuals to pause or maybe to not take action like they would otherwise. But we don't know that that's always going to be the case by any means. So we've been very fortunate over the last 15 years, and we just have to recognize that may not be the norm. It may just be an aberration that we've been fortunate to experience.
Owen, I want to bring you in on this same question before we get more into Act 388. The underlying principles of sound tax policy in our state, being equitable, efficient, stable, transparent, and competitive. What's your assessment about where we are in South Carolina?
I think it depends who you ask. I would argue that the people that benefited under the 2017 income tax reform would probably say yes, but the vast majority of South Carolinians probably have not. I think anytime you shift tax revenue from one portion, as 388 did, there's going to be haves and have-nots. I go back to the timing of the recession after you make a change to rely on sales tax revenue to fill the gap of school funding. At the time, granted, they didn't see the recession coming, but that is probably the absolute worst thing that could have happened after you stop funding schools with property tax revenue and you convert it over to a sales tax, and then you have a recession and people aren't out spending. Meanwhile, the General Assembly's budget has continued to grow every single year. So then you see the General Assembly turn around and give income tax cuts left and right, exempt certain things from sales tax. I think there's been 17 exemptions over the past 15 years, which further cuts into that revenue. So I think I think maybe it was designed to be equitable, but every year they just kind of chip away at it a little more so that create those gaps between the haves and the have-nots.
All right, I appreciate that. Before I go to Nick, if we have a staff member available just to bring some cups of water on stage, we'd certainly appreciate that. The pollen and allergies in South Carolina are always doing what they do. So if there's someone who can help us out with that, we would certainly appreciate it. Nick, I want to come back to you. So let's go ahead and talk more about Act 388. You kind of gave us the overview of how it came to be earlier. in your estimation now, where we are right now, what do you believe, or who do you believe bears the burden of the property tax, and what is the impact of it, for better or for worse?
Well, unfortunately, at least from my perspective, from the real estate industry, tenants are bearing the biggest cost of this because second homes, those properties traditionally treated as commercial properties, 6%, are taxed at almost three times the rate of a similar owner-occupied home. Those costs are passed on to tenants in residential housing, and what we've seen just since COVID alone, our friends in the home building industry have seen this as well. Home values in South Carolina have increased by more than 50% since 2020. Demand is still at an all-time high. Inventory is still almost at a historic low. We're a couple of 100,000 units short of where we need to be. And to Bob's point, I was in Charlotte last week, drove through 6 new subdivisions where at the main gate, that sign at the main gate said for rent only. And I do believe we need to have good rental inventory in the marketplace, but I don't want to see that as the only choice for my children and those aspiring homeowners. You cannot build generational wealth by renting. And so as we see rising demographics of homeowners, we need to address this policy from a residential use perspective and make that more equitable on that end.
Scott, what about you? Who do you think bears the biggest burden, and what is the impact, for better or worse?
I think people who buy a house, be it a brand new home or a buy house, they're bearing a huge burden because the way Act 388 is set up, when you buy a house, you are now being taxed on that home at the market value, the value that you purchased it for, instead of your neighbor who's next door, who's been in his neighborhood for 20 years, may have the same value of the home as mine, but he or she is paying much lower property tax, has a much lower property tax burden because of the assessment cap that they have. So that's good for the long-term owner, but the new owner is being hit with a much larger property tax burden than the same home next door in the same neighborhood on the same street. So I think those folks are suffering as well. That's why I've only bought one house in the last 11, so to avoid having to pay even more in property taxes.
Bob, your assessment on that?
Yes, I would say that in some of your wealthier counties, the commercial property taxpayers are paying a disproportionate share relative to the owner-occupied tax base. In your more poor counties where you don't have that corporate base, schools are going unfunded or underfunded, and the children are bearing a disproportionate share of the impact.
Joey, what do you have to add to that?
Yeah, I don't know that I have anything to add to what folks have said so far, except to emphasize the point, getting back to the equity and looking at these urban versus rural areas, particularly where you see the burden that is concentrated in one group. Maybe it's more among businesses, and that's going to vary depending on whether it is a more urban or rural area, how big the region is, what type of economic activity and economic diversity there is among the industries, in terms of how that burden is distributed. So that's certainly an important component of this as well.
Yeah, thank you so much for that. Touching on what Bob said, and Owen, going back to what we were discussing earlier about education and school districts, the impact of Act 388 on school budgets. What insights do you have?
I think there's twofold. I'd like to comment on the first question because there's a systematic problem when you have the largest portion of the tax base, i.e. residential payers, contributing the least amount into the county tax revenue. So I think that right there, when we gave 100% exemption, homestead exemption to 4%ers so they don't pay any school operating costs, and then what people confused about, and when they get their tax bill on 6% property, they look at it and they say, wow, my county rates are so high. But if they actually take the time to break it down, the county property taxes are the lowest number on that property tax bill. It's your school operating costs, because they have a separate millage, that is what they're paying and what is jacking up their property tax rate. So I haven't encountered anybody. I have 2 children, one 5 and one 3, and I would have no qualms about paying higher property taxes as a owner-occupied single-family home if it meant that my children were going to be guaranteed a better education than they are today. So I don't think it's an issue of 4%ers saying we don't want to pay the taxes. It's just, it was a knee-jerk reaction in 2008 to curb the increase in property taxes. But I think that people are willing to pay higher taxes if they actually benefit. The problem is now the higher taxes are being paid by businesses and 6%ers who may not even have kids in the state, may not even live in the state, and they're not seeing the benefit of it. So,
have you been to a community meeting in a Sun City community, Owen, as to whether or not they would be willing to pay school operating taxes or not?
I'll leave that field trip to you. But
He said he has a 5-year-old and a 1-year-old. Right?
I'm not quite at the Sun City age yet.
I've been looking around at Sun Cities. I'm getting there. I'm getting close.
But it's a different perspective, right?
Yeah, I mean, look, Joey, I think Joey touched on it. The folks who are and we've talked about it all day. Folks who are moving here from off, many of them are retired. They're moving to areas coming to South Carolina because we're a low tax state, and just read some of the news reports. Talk to some of those folks who come in. Look, we don't want to pay school taxes because we don't have kids in school. So why should we have to pay property taxes? I wish that I agree with Owen. I'm happy to pay more in school operating taxes if Act 388 were to be changed. And somebody might say, well, I can volunteer to write a check to a school, and I have many times. But that the attitude of, hey, we've got to educate all of our children and take care of the next generation is not necessarily something that is widely shared across the state amongst all, especially in my view, amongst some of the folks who are moving here.
For those of you who do, you're at the State House, for those of you who interact with state lawmakers, I mean, is there a general consensus they acknowledge the detrimental impact of this bill? There's just not the political will, particularly during an election year, to do anything about it?
Scott referenced it earlier. I'm a relative newcomer to the lobby. I've been here for 3 years. I can't find a single legislator who will defend it. Nor can I find a single legislator who's ready to take it on.
Right.
And it's an interesting dynamic. I did hear, we know Senator Bennett is someone who has been a champion for comprehensive tax reform for some time, and we assume he'll continue that. Did hear a senator in leadership somewhat recently when asked what are the prospects for comprehensive tax reform in maybe 2025. He said, keep an eye on the $1.8 billion in found money. Now, we can all chuckle over $1.8 billion in found money. Wouldn't that be nice to have as a problem? But depending on what it turns out that money is for and what it's obligated for, they'll have some choices for how to spend it. Maybe that could be a way to address some kind of a workaround to 388, maybe.
Nick, any insights about that?
No.
No. Nick said, I'm not going there. I am not going there. Let's talk about, did anyone else want to weigh in on the impact on school budgets before we move on to the next question?
I will say one comment
Okay.
about schools.
Yes.
One of the ugly impacts of 388 is this adversarial conflict that is created between business community and our schools. We should be in partnership together, and oftentimes, when a tax a millage increase gets put out there, it creates this conflict where there should be partnerships, and to me that's one of the bigger failings here is that it's painted the business community to always, if you see the burden that's on 6% properties, one of the highest rates in the entire country. and to force a business to be, anti-school or to protect their employees and their business from yet another tax increase, it puts them in an untenable situation, and that's something that we need to address.
Thank you for that, Nick. We appreciate it. So when we look at the issue of lower assessment ratios through exemptions, what would the effect of that be? Joey, would you like to start?
So I think, well, you have to look at those three groups again.
Okay.
And we're looking at businesses, we're looking at renters, and look at the existing homeowners. And it depends on how that would be implemented. But I think that from just a general perspective, looking at the impacts on each one, where does that have the biggest impact? What does that look like depending on how any change would be implemented? And I don't think we could say for certain, but certainly you'd have to look at each one individually, and from a regional perspective, how does that change based on location and based on the group that we're referring to?
I'm just curious, do lawmakers rely on you or we heard Representative Thigpen earlier talk about, well, he's going through leadership South Carolina, but for data analysis, for information based on facts and, people who truly understand the economic climate and what drives our economy in South Carolina, do they tap into the resources you have at the university?
They do. They ask for different assessments of what we would see for a particular change, and that can be the arrival of a new business. It can be a potential tax policy change. It can be any number of organizational changes that we see at the state or the local level, and just assessing what that impact would be on total activity, what it could mean for different regions of the state, what it could mean for job creation. So there are all sorts of different economic implications for any type of business or community change. So we evaluate those types of specific questions on a regular basis, in addition to doing broader outlooks for the state and the region based on national economic conditions and what the more the structural variables of the state imply for future growth.
Okay, that's great insight. Thank you so much. Scott, what is your take on that? Would the effect of lower assessment ratios, what would be the effect, rather, of lower assessment ratios through exemptions?
Well, I think where that question, I'll think of an example of where that question would apply.
Okay.
And that would be with regard to recruiting a large industrial prospect. Instead of them paying a 6.5% assessment ratio, the county or the state or whomever negotiates a lower property tax assessment ratio, maybe even down to 4%. And so in exchange for any number of different kind of economic activities, number of employees, investment, minimum investment, that kind of thing. So when you exempt one person from paying for lack of a better term, the full freight on property taxes, then that's going to shift that potential burden over to another group. From local government perspective, and Owen can disagree or not, from a local government perspective, it may not be worth that fee load. The service burden that the city or the town or the county may have to provide to that business is more expensive than perhaps the economic benefit that you'll get out of it. Sure, job creators create income taxes to the state. Hopefully, those new employees will be able to live in housing within the jurisdiction and pay property taxes or fees or whatever. But as we talked about earlier, NIMBYs don't want those folks in their communities, so they may not. They may live away from the community where the manufacturing plant is. So I think it's, as Joey suggests, it's project specific in some cases. I think it has more of an impact on county operations than it does on cities. Cities, we don't necessarily have those large employers and large manufacturers come to our jurisdictions, but we are service providers in terms of infrastructure, so it does have an effect sometimes.
Owen?
Sure, I know there was mention of the 10.5% on industrial and manufacturing property. I'm not sure there's any industrial manufacturing property out there that's paying 10.5%. In 2017, when they redid the income tax bill, that lowered the effective rate through exemptions to 9%, and since then it's been lowered to 6%. Now what that does is it kind of, as he referred to as a fee in lieu of taxation, counties have the authority. That's their only bargaining chip in bringing business to their county over another county. They can offer a stagnant millage for a certain number of years, plus a lower assessment rate. For a county perspective, it keeps things competitive. Now, on the other hand, when the state lowered it to 6%, now counties are having to go below that to even get the fee low. And without going into too much detail, that's important. And it's important because if they utilize the state 6%, then that gets reimbursed to school districts. If they utilize the fee low, oftentimes that doesn't. So from a school district perspective, they would, rather than take the 6%, than negotiate the fee in lieu with the county at 4 or 6%, depending on how big the project is. And the problem with that is it's reimbursed through a property tax reimbursement fund that is capped at about $180 million. And we're about to hit that cap. So unless the state puts more money into this reimbursement fund, then it's going to mess budgets up with counties because they're going to plan on getting reimbursed for this new manufacturing plant coming in, or they may have to issue refunds. We're ahead of it. Department of Revenue is aware of the issue, but I'm not sure of any deals that have been done since I started that are actually paying the 10.5%. It is a deterrent when you look at it in statute and you're determining whether to move to South Carolina. It is a head scratcher as to why you would move to South Carolina, open up your manufacturing or industrial plant there and pay that. But in all reality, most of these industrial or manufacturing jobs that have come here and the plants that have come here are either paying 9 or 6%. And a lot of those, more than ever, are now negotiated under a fee in lieu of taxation so that counties can compete with each other. So I want to throw that out there. I'm not saying it's the best way, but when you've got a property tax rate as high as it was at 10.5%, I don't know how you attract any business coming here. I know it's bad enough for commercial and rental property at 6%, but you're looking at, 10.5% of the assessed value times whatever that's a lot of money. And it's not, I think they realize that, so they, instead of just lowering it to 9% or 6%, they increase the exemption. And that's one way to do it, but once again, the common person reading the statute doesn't understand that. You basically have to hire a tax attorney to come in here and negotiate it on your behalf. And that's something we could change, but I don't know how you do. We've done exemptions with everything from income tax to sales tax, and all it ends up with is less revenue for everybody. So I wouldn't personally go that way, but I'm not an expert on the subject matter at all.
Anybody else want to weigh in on that thought? So, Nick, let me ask you this question. Touching back on the fact that this is an election year, we look at, property tax reform is always such a big issue in South Carolina. What kinds of questions should we, as constituents, as business owners, just as interested in, South Carolina thriving, what kind of questions should we be asking our lawmakers?
I think we have to ask what's important to our communities. The owner-occupied tax is almost sacrosanct at this point. Nobody's going to tackle that in an election year. But we need to look at, and we need to keep pressing forward because I think there will come an opportunity to address Act 388, or at least sometimes the best way to eat an elephant is one bite at a time, and maybe we take a few bites around the edges and address some minor changes that will hopefully add up to significant changes in the long run. I don't anticipate that we'll see any significant movement on this prior to this fall's election, and I don't know what else I could add to that, to be honest.
Well, and it's just one of those things, we talked about that earlier, about incremental change, right? But I think to Owen's point, you go and talk to 10 people, 100 people on the street, I'm not sure that they understand, what this act is, the impact on South Carolina, and, it just kind of.
Yeah, if you ask your mom and pop landlords in your towns and cities, they know they're collecting 3 or 4 months rent just to pay the property taxes. Insurance costs are now becoming the thing that keeps me awake at night. If y'all seen what's happening with homeowners insurance costs, auto insurance costs, they're skyrocketing. It started on the coast and is spreading inland. It is going to squeeze our small business people. I don't want to say scare them to death, squeeze them to death, but it's going to become very, very expensive to stay in business, especially if you're in rental management or property management.
All right, Nick, thank you for that observation.
Judy, if I could
Sure,
just jump
absolutely.
in, throw a couple of other issues on the table, and Nick just brought one of them up. Tort reform or lawsuit reform addressing joint and several liability.
Realtors might be interested in that right now.
Might be. A group of us, part of the Coalition for Lawsuit Reform, we got that issue further along in the Senate than we have since the issue first came up in 2005, and we lost by just a couple of votes. And it was a classic, the business community broadly versus trial lawyers. Apologies if there are any trial lawyers in the audience. But that's a question to ask, particularly in some of these key primary races that are coming up on June the 11th. Is your senator or your representative or your candidates for those offices, are they for the reform of joint and several or not? Because joint and several is exactly what's driving the insurance rates that are higher for the most part in South Carolina than in the other states around us. There's another issue brewing. It's not directly related to housing, but there's a big debate right now between the House and the Senate over energy policy. 2 Christmases ago, we came perilously close to rolling blackouts because we didn't have enough energy capacity on a cold, cold Christmas Eve. Predictions are that this summer might be one of the hottest in a long time. It's not out of the question that we have rolling blackouts this summer as it relates to energy consumption, and certainly as we look longer term out. Record economic development, record consumption is coming. What are we doing to add capacity? And that debate is very much alive and real as we sit here and speak between the House and the Senate. So that too could and should be a part of the conversation between now and the election in June as well as November.
Oh, those are great points. I remember those were discussed at the Chamber Forum as well, and I think the governor had a conference recently talking about the energy concerns. Joe, you want to add to that?
I was just going to add to that that the other factor here is that going back to the comments about the economy, that inflation is still high, and we've seen most South Carolinians lose purchasing power. So any discussion surrounding tax changes, and particularly if you're talking about a property tax increase for any individual or group, I think that becomes a more challenging discussion in a scenario where most people have seen their purchasing power eroded. Economic confidence, consumer confidence is not very high right now. And for, again, a very good reason. We've seen meaningful losses that most people have had to go through over the last several years. And so that's just another layer of challenge that we have to face if we're looking at any type of reform this year as opposed to what we've seen in recent history.
Yeah, those are great observations. When we look at business and economic development in South Carolina, and I don't know if this is a question for the Department of Commerce or if Bob, you or Joey have any insight, and I don't want to use a particular company's name, but just say any company, is coming to South Carolina, and when we cover the jobs announcement or the groundbreaking or the announcement that they're coming, there's usually a line in the news release about expected economic impact of however many dollars and this many jobs and all of that. Do we do a good job in our state of tracking the deliverables on whether companies are actually producing that result that they're promising when they come in and get those tax cuts and incentives?
Well, I can start with that. I would say that's a question largely for the Department of Commerce in terms of what they're doing, because they are tracking on a regular basis job announcements versus what comes to pass, and of course economic conditions change, and sometimes expectations have to change. And that's certainly an important component of any economic development policy, is tracking the success or lack thereof of any particular policy trying to get those companies here. I can't speak to the details there, but that's certainly something that I think Commerce looks at in terms of here's what they're offering, here's what happens in the subsequent years.
Yeah, and I guess that's really getting to the heart of my question is if, we have that track record to be able to say what's working, and what's not.
Judi, I think we're getting better at it as a
Okay.
state. I think clawbacks have largely been a part of economic development deals in the past, but whether or not they were actually enforced or followed, I don't know that was being done consistently. But after a number of reports over the years on companies that didn't fulfill their end of the bargain, people are, I think, getting more serious about monitoring the progress, making sure that they're meeting their end of the contract, and if they don't, then they're taking real action to claw back those incentives to make sure that they protect the residents and the taxpayers.
And in some cases, those incentives are actually tied to performance too. So job tax credits, for example. So they, in many cases, are very proactive, so that the benefit only comes with the once they actually perform.
That's a great point. Great point. Do we have any questions from our audience? If you raise your hand, our staff members will bring a microphone around to you to make sure that you can tap into all of this expertise we have on the stage. We have a gentleman in the back. If you would stand up, he'll bring the microphone to you. And if you would be so kind as to introduce yourself to our panel, we'd appreciate it.
Hello, my name is Carl Hasslinger, and I am on the South Carolina Board of Housing Finance and Development. And so I was going to just make a comment, kind of pull this back to housing attainability. What Bob said is right. I've got about 40 rental houses, and I probably spend 3, maybe a little bit more months of rent just to pay my taxes on that. And so rental housing is part of the attainability of housing for people also. If we were to somehow manage to adjust the taxes on the rentals, of course this does sound self-serving, I know that, but we would begin to attract other investment. I also know as a home builder that most people that are in private equity groups that would look at building rental housing in South Carolina, it's got to be a pretty unique project to qualify. Most of them just turn their noses up at it. So I would just like to make a comment. I'd like to see some kind of adjustment made to let the market forces work and begin bringing more rental houses in, and to bring rental housing. I think the long-term thing would be to bring the cost of rental housing down.
Thank you, Carl, for that. Nick, would you like to
Yeah,
share some observations?
sometimes these elected folks get too hung up on policy as opposed to what's really happening out on the street. And I think what you said is right on the money. It's there, I think a scenario where all residential use property, whether it's single family, owner occupied, multifamily, rental, if it's being used for somebody to live in, for a job to sleep at night, for kids to sleep under a secure roof, that all ought to be taxed at the same rate. Would that, decrease rents overnight? Maybe not, but it would slow down the ever increasing rate of those rents, making housing choices more affordable for a larger group of people. And I think we've got to focus on property use a little bit more as opposed to these broader classifications that we've had in the past, so that we can stay competitive, provide sound housing for our citizens here in South Carolina, and be able to compete and attract that type of economic development that we desperately continue to need in our state.
Thank you, Nick. Did anyone else want to weigh in on that topic?
I'll just say this, Carl, I would challenge you to challenge your legislators when you're talking to them. I've been talking to our members, our city council members, mayors, city staff folks over the years about the both sides of our mouth problem that we have when it comes to housing, especially workforce affordable housing. on the one side, we lament the lack of workforce housing in our communities, and we whine about how our folks can't afford to live in the town in which they work. But yet, when solutions potentially are proposed, we then rise up and whine and complain about, hey, how much it's going to cost us to serve that project, how much revenue we're going to lose. There's a medium level we can reach there. And so I challenge them by saying, don't complain about this problem over here and then complain even worse or the same about a potential solution. We've all got to sacrifice a little bit here. And so I would challenge you to challenge your legislators, because I hear legislators talk about the lack of workforce housing across the state, but in terms of coming up with solutions for it that cost the state some skin in the game versus just local governments, which is where the state is shifting that to, then they should be willing to talk about some potential solutions.
I'll just add one thing, and I've done some deep dives into property taxes in South Carolina, and the thing that baffles me, and I've always said the difference between 4% and 6% should be 2%, not 300 to 400%. But until you stop putting school millage on those 6%ers, it's never going to happen. So in theory, when you say, oh, we're at 6% instead of 4%, well, yes, you are, but you're also paying a separate millage, and that's what jacks up your property tax. So I think it's kind of disingenuous to even say they're paying 6%, because really they're paying 6% plus operating millage for schools. And until they can get that and grasp that up at the General Assembly and realize that what a burden that is on small businesses and rental properties, I think that's the key, is making them understand that.
And in my view, let's put some of that burden, some of that school operating burden back on residential owner-occupied property. Instead of let's tax everybody at 5% instead of 4%, 6%, and everybody helps contribute to school operating millage. Now, that's just one idea.
Did your city sign off on that?
No, but I'm just saying, I just said that is an idea. I didn't say it was the idea.
It's an idea to put on the table. Nick, what did you want to add?
No, we've worked with the city of Greenville, and most recently we shared research with the city of Columbia identifying what we call missing middle properties, where you have pockets of property that's either underzoned or undeveloped within the jurisdiction of the municipality. And with just a little bit of variance in the density, a little bit of variance with some of the permitting, you can create housing in your communities that address what we call the missing middle, workforce housing. But as Scott said earlier, the NIMBYs come out with their pitchforks and torches. Density is the solution to a lot of these issues, but it's also it's a 6-letter, 4-letter dirty word. It's a major challenge that we face in all of our growing communities.
All right, thank you so much. Another question from our audience? Mike's got a question in back.
Oh, is Mark allowed to ask questions?
Yeah, Mark's allowed to ask questions.
Okay.
I'm trying to figure out how to keep me quiet, and my wife would appreciate that. I agree with everything that's been said so far. I think one of the issues we kind of look back on 388, and I wasn't a big fan at the time, was that, especially when we looked at 388 when it was passed, we used to have a little bit different, methodology. So, for every 100 rooftops that my members built, we brought grocery stores in, we brought other commercial businesses in. You had 12 or 13 commercial projects that came along with it. And I don't know about most of you, but when I shopped for Christmas the last couple of years, everything's online, right? We're not seeing as many of those brick and mortar, commercial businesses following the rooftops that go along with it. So we're missing kind of what the whole platform and what 388 is supposed to be about. We're bringing in the growth, you're making money back based on the property tax and the sales tax with the new commercial. And I'm with you, I think that's the biggest issue we see. We have an impact fee in York County, $18,000 for a school impact fee going into it. And what we're really doing is making a gated community for those kind of subdivisions. And I don't know if it was Owen said it earlier about education. I don't think we need to keep on pushing money into education, but what we need to do is how do we fund it, especially the infrastructure, so it's just not commercial properties pushing it, like, Nick said earlier, a certain amount that's doing all the funding. I think we need to kind of look at it a more equitable way to make sure we can put our kids to school, make sure the schools are in good shape without taxing everyone else. And I don't know, 100% got Nick. Take this to the General Assembly, say we're going to raise your taxes. There's a dirty word that no one's going to vote for, even if it looks like it's going to be equitable across the board. But we also need to make sure, as Bob said, we bring in those commercial properties, the industry, make sure we have those good paying jobs done. So, it kind of goes back and forth. I think maybe Joey might be the one to look at. I don't think Joey, have you looked at it, still infrastructure funding at all?
Not specifically, no.
So I threw you on the target right off the bat. But that's where I think we need to kind of look at is, if we look at, property tax reform, and I always do, I think comprehensive reform makes the most sense, but Nick will tell you, because he has more experience than I have, likely never gonna happen. It's gonna have to be, how do we kind of cut at the edges of it? But at the same time, we need to do something.
We do.
No real question, just a comment.
Well, we appreciate the insight. Bob, did you want to weigh in on that? I mean, these are such critical issues I know that the Chamber has talked about for a long time and has really been working to kind of address. And again, we keep focusing on incremental progress to be able to do a little bit at a time, but the landscape is quickly changing.
It is, but I'm normally an optimist. I don't know that we're going to get comprehensive reform. I do think we're chipping it away at it. I would commend the legislature for what they've done in lowering the personal income tax rate over the last couple of years at a time when they've been flush with cash. They've also done that at the same time that they are fairly dramatically raising starter pay for teachers, and that's certainly a step in the right direction. We would view comprehensive reform to also include, South Carolina is very competitive with incentives for manufacturing, and we see that with Volkswagen and all the way back to Boeing and everything in between. We are less competitive with our surrounding states as it relates to white-collar jobs. And when we get into the subject of brain drain and all the kids that we're returning out of USC and Clemson and our other institutions of higher learning who are going to Charlotte and Atlanta and Raleigh and elsewhere, more white-collar jobs is part of the answer for that. There's another issue that's getting even further away from housing affordability, but again, back to the labor force participation rate. Why is it so low? One of the major barriers to participation is the cost of child care. There is a child care tax credit. We're a small state, but we really ought to have more than 19 companies taking advantage of that tax credit. Clearly, it's not competitive. Something needs to be done with it. The House and Senate have appointed an ad hoc committee on child care. Look forward to some policy ideas coming forward in the form of proposed legislation in 2025.
Oh, that's good insight. Thank you very much. Another question from the audience? Anyone else? Curtis, I can't believe you haven't had a question yet for this panel.
I can come up with a question.
Okay, all right.
Here's my question. I've listened to.
They're bringing you the microphone. Hold on one moment. Thank you. Thank you so much.
So I've listened all day, and I work a lot with the nonprofit sector. A lot of solutions could come directly through the nonprofit sector, but I haven't heard anybody address the nonprofit sector, particularly from the standpoint of view of capacity. I had a conversation with one of you, I can't even see, I have my glasses on, about this, because we've got like BCD COG. The COGs are 501c4s, chambers, same thing, the same boat. These are all nonprofit entities. They have tentacles that go out into the community that literally can push some of this activity that I'm hearing can be done, particularly on the advocacy side. So, can you all speak to that?
I'll try by asking a clarifying question. When you say, Curtis, the things that, so certainly we advocate as the Municipal Association, as 271 cities and towns across the state, we advocate for sound tax policy, specifically, particularly property tax reform, We do that through our education efforts of our elected officials in particular, because they're the ones who are, they share the same constituents as members of the General Assembly. So we try to make sure that they understand the challenges that our tax system presents to them, not only from an operational standpoint, but from a community development standpoint and economic development standpoint. Problem is, and well, I say this is a problem, some people may not view it as a problem. One of the challenges that we face, and I'm sure Owen does, all of you member-based, or all of us member-based organizations probably do, is turnover. Just about the time that we think that our members are starting to get our message, a whole new crop of officials come in, and we have to start that education process over from the beginning. Meanwhile, the General Assembly is also turning over. So we have to be vigilant. So that, in my view, deters the opportunity for some long-term, for solutions that aren't going to manifest in a short amount of time. These conversations have to occur over a long period of time, but as we have to keep repeating the message and reteaching, we lose that momentum. I don't know if that answers your question at all. We certainly are trying to take advantage of opportunities in the General Assembly to have positive effects for cities and towns anyway on tax policy. But again, turnover at the local level at the General Assembly sometimes kind of thwarts that effort.
Yeah.
I think that what I'm getting at is, while there is certainly a focus on the legislature, you have a built-in network with your nonprofits. Most of your affordable housing, for example, I'm down in the Charleston area looking at how much money they've expended for critical home repair. Every last one of those organizations is a nonprofit. So is there a way for you all to shift your focus in terms of building a tighter relationship with the nonprofit sector in these different areas across economic, community development, and workforce development?
Gotcha. Thank you for that clarification. I was wondering what you meant by the capacity of nonprofits. Owen, you wanted to?
So there was a bill passed a couple years ago that allowed nonprofits to partner with for-profit corporations as long as they had a controlling interest in the project to develop affordable housing and get a property tax break. And I'm going to be quite frank, the idea was great, and it's still a great idea, but it reeked of abuse after a few years because there was no requirement that the for-profit or the nonprofit had to continue to supply affordable housing after they first received that property tax exemption. So we had instances, and I can give you Lexington County and in York County, where $200 million projects were going off the tax book under the guise they were providing affordable housing. It turns out 3 years later, 5 of the 100 units were affordable housing, and they weren't paying a dime in property tax because they did not have to certify every year that they were continuing to provide affordable housing. There's a bill right now going through the General Assembly. It's a Senate bill. It passed the Senate. It's in the House that would require a certification every year that they are continuing to provide low-income housing, and they would get up to 100% property tax exemption based on the percentage that the nonprofit holds in the project. So that is one way that the state has viewed the partnership between nonprofit organizations and for-profit builders, developers, in order to incentivize the affordable housing. But what we just didn't want to do was people take advantage of that. And so this is kind of a safeguard. But I think you'll see more of those partnerships develop over the next few years, as especially in Rock Hill, York County, as the need expands, that this is a good opportunity for them to do that. And I think you're going to see counties and cities happy to give those tax breaks for the affordable housing as long as it's not abused.
Well, do you think that has a realistic shot of passing during this legislative session? Okay, that's great. Something on my follow-up list. Thank you, Owen.
Do you have anything to add to that?
Yeah.
Fingers crossed.
Nick, what did you want to add?
No, I would say part of the problem is the mixed messaging, and by that I mean, if you locked the 6 of us in a room, something I would highly object to, we would be at an impasse very shortly. And I'm going to come to the defense of the legislature. I know we've kind of poked at them today a little bit for failing to act on this. But the truth of the matter is, fixing Act 388 is not a simple fix. It's not as simple as repealing it or replacing it with something else. There are a lot, as we've learned, a lot of unintended consequences to tax reform, and depending on your viewpoint, the business that you're in, the constituency you represent, your answer to Act 388 is going to be a little different. And that solution, the fact that we don't have a unified message to go to the legislature with and say, hey, this is what we all want, if we were able to do that, then there might be a different story. I was proud to work with the Chamber a few years ago. We put together the most comprehensive research and data on Act 388 than anybody's ever done. And it's in multiple volumes, and it's sitting on a shelf somewhere collecting dust, unfortunately. Unfortunately, because we have not been able to get together and find a unified approach. There isn't another state in the country that does it any worse or any better than what we've got. There are lots of different examples out there. And what we haven't found is that silver bullet, right? What the legislative fix that we could unify around all the different special interests to make it work. If we're able to do that, then I think we can get the legislature to act.
Any other questions from the audience? Got about 10 minutes left. If you guys want to work in another question, be sure to raise your hand. Nick, if you would expound on that a little bit, because I think you touched on a great point where, you talk about Act 388 and all of the problems with it, but, you have to look at the flip side of the coin and say, well, what would be the impact of repealing it? It's not that simple. What would be your concerns about, yet again, another knee-jerk reaction?
Well, again, the unintended consequences. We've got now a generation of homeowners that that haven't paid into the school system, whose tax bills are predictable, that they can base future budgets on, and as these largest segment are baby boomers who are entering their retirement years and are counting on that fixed those fixed expenses going forward, and sometimes they're looking at a situation where they're in a low mortgage, they've been in their house for 15 or 20 years, and they want to downsize, they need to downsize, but they can't afford to, because buying a smaller house would end up being a lot more expensive. Every one of my neighbors in Florence is from New Jersey, New York, Pennsylvania, and they think they've hit the lottery when they move to South Carolina. And so it depends on the perspective that you come into, but the consequences of Act 388, the unintended consequences of repealing Act 388 could be just as bad as the implementation of Act 388. All I know is that I don't want to be in the lobby when the next act gets put up.
Bob, what concerns would you have from the business community?
I think the question is, we are living in a pretty remarkable time. I think we're going to look back somewhere down the road and say these are the good old days. And the economy in South Carolina is remarkably robust and vibrant. I know that we human beings tend not to act unless there's a crisis, but we have an opportunity, because we are so flush, to address this issue, to address some of these other issues that we've talked about. And I just think that if there is another, and there will be another downturn at some point, hopefully not anytime soon, it might be, the longer we put it off, it may be that much more painful than if we were to address it now. I will plead guilty to the comment that we all tend to talk out of both sides of our mouth at times. We represent the business community broadly, And when we go into a legislator's office and we talk about comprehensive tax reform, oftentimes when we leave, individual members of ours walk in and say, well, don't mess with my exemption. Or the service sector says, don't even talk about taxing services and applying the sales tax more broadly. And so we are not on the same page. I would agree with Nick in that regard. And yet, if we can't address it in the good times, how much more painful is it going to be when there's a crisis is a big concern.
That's an excellent point. We get a lot of that as well, where there'll be offline conversations off camera that are very different from the conversations that are on the record for various reasons. Joey, that comment from Bob brings me back to the economy. And one of my frustrations in working in the media is that looking at things like the economy, looking at things like tax policy, even home affordability, and just where we are in terms of job growth, all these things that are in national headlines and get spun up during an election year. And you have people on the national networks who are talking about all of these things who get lumped in as journalists, or they're on a panel with an economist, but they don't really know anything about the economy. You know, they are either a political analyst or a consultant or tied to a political campaign. So my question to you is, you know, for us to be better consumers of that knowledge and information on the economy, you know, Bob just talked about, you know, South Carolina versus, you know, the national economy. Where do we stand in South Carolina in terms of looking at the indicators of the economy nationally versus South Carolina? And what are the things we should be looking at in order to tell which direction we are headed as a state?
So that's a great question. I would say that the short answer is that South Carolina is doing far better than the national average. That's generally true across most metrics. That has been true over the previous decade, and all of the competitive advantages that South Carolina had before the pandemic have basically been increased, or we've been building on that momentum. Population growth is a big component of that. That's going to be driving demand. We talked about that. Mm-hmm. I think the two biggest advantages that South Carolina has overall compared to other states is our infrastructure and our workforce development initiatives that both have gained national recognition in multiple different ways. And our geographic location that complements those other two really makes South Carolina economically competitive and likely to be an economic powerhouse for the foreseeable future. So we're very bullish on the long run outlook. And I think when we talk about Act 388 or any other types of reform, I think Bob made this point before. How do we keep ourselves economically competitive and build on that momentum that we have going for us now? Because we have so much opportunity going forward. So I think that's an important framing to think about any types of these changes in policy decisions. And then going forward for individuals, looking at the outlook, I think coming back to the reality of 2024, which is where we do have a seeming contradiction, that the economy is doing well by a lot of standard measures. We are more optimistic that we're not going to see a recession this year, and yet people don't feel it, and that's because they really have lost purchasing power. And for most people, the state of the economy is basically a function of job security, you know, just how concerned are you about losing your job or your family losing their job, a family member. What do your wages look like, and wage growth, and what do prices look like? You know, those are the big three. And certainly from a pricing standpoint, job security may be good, but if wages aren't rising as much as prices, that's 2 out of 3, where I think the average South Carolinian looks around and just says, you know, I'm not feeling it. I hear about it on the news, but I'm not feeling it. And that's a reality that we face this year.
Yeah, that's a tough dynamic to navigate and to know what is the real deal, you know, so to speak. Let me check the time here. We have about 5 more minutes. Any other questions from the audience before we wrap up with our panelists? Well, let me start with Nick, and I'll work my way back down to this panel, right to the other end of the panel with Bob. Our final charge, Nick, you know, when we have these discussions, we don't just want to walk away with knowledge in terms of action. What would your challenge or call to action be as we look to tackle this issue of property tax reform and housing affordability?
I think we need more diverse voices on stages like this and at forums around the state. interacting with our local elected leaders. And I think when we get our communities involved, these problems tend to find solutions. We just need more people at the table. I'm very thankful to share a few minutes with you today, and I'm sorry I didn't get to share the stage with Andy White today.
Oh, and you talked earlier about the importance of engaging with lawmakers, so I'm going to flip the script a little bit. What is the best way to engage with them?
Well, from our perspective, we've tried to tackle Act 388 one piece at a time. We bring them legislation proposing to allow counties and local governments to exceed the millage cap for fire protection or certain services, because as these people move to South Carolina, the demand on services of the local government continue to rise, but the property tax base in many of our counties is not. So we are looking for innovative ways to get around 388 and to lessen the impacts of 388. But what we've run into every year is members of the General Assembly saying, I don't want to take a bite out of it. If we're going to tackle it, let's tackle it with reform. Yet we get back to that's not happening. So we're going to continue fighting. There's another bill this year that would allow counties to exceed the millage cap rate for fire protection only in the fire districts. And we're hoping it's passed one chamber. We hope that this will be the start of allowing counties additional and cities additional revenue to be able to take care of the needs of their citizens, especially as more and more people move to South Carolina. So I think, to answer your question, I think even though it's an election year, continue the conversation, have the conversations, because they may not get up and introduce a bill for you, but if they're back next year, they're going to remember who put them there and who talked to them. So that's the best advice I have.
Thank you very much, Scott.
Yeah, I'll piggyback on that and say, give them cover. If you agree that this issue or any other needs to be addressed in a small way or hopefully more in a comprehensive way, then give your legislators the cover to do that. And implore them to certainly take into account the small minority of voices that they hear all the time. But let them know that you and your industry and your colleagues and friends and family have their backs if they decide that they want to tackle this issue or any other, because that'll hopefully give them the confidence that they are meeting the needs of the majority of folks across the state, rather than that very vocal few who don't want anything to change or want things to change in the wrong direction. But that would be my advice.
Great advice. Thank you very much, Joey. I'm going to change this question up a little bit for you, because there is so much anxiety about the possibility, of another recession or financial crisis and all of that. What is the best way from an intellectual standpoint to be able to really manage and understand what's on the horizon, to prepare for that and again, to try and negotiate that soft landing you talked about earlier?
I think the key is looking at tracking what the Fed is doing this year. And if we're just looking for basic metrics, are we going to go into a recession this year? I think there are two metrics I would focus on that everybody in the room can look at. One is initial unemployment insurance claims, which is just a way that we measure the number of newly laid off workers. If that goes up, that's typically a major red flag for a significant pullback in the economy. And then the other is going back to the metrics that we looked at before. If inflation starts to go back up, particularly if it gets above wage growth, which has been hovering around 4%. So if inflation goes above 4% and stays above 4%, then we're more likely to see significant pullback in consumer spending. So that's going to be another red flag. So I would say if you're just looking for the very basics, are we going to go into a recession? What do I need to be looking out for? I'd say a spike in unemployment insurance claims and inflation going back above 4% for an extended period.
Excellent, thank you. Bob, final closing remarks from you, our charge and biggest concerns moving forward.
Yeah, so if we had any number of legislators on this panel, they would say, let us hear from you. And I would challenge everybody in this room. We have a unique opportunity in 2024. All 170 members of the legislature are up for election. That only happens every 4 years. And while there may be a handful of seats that are uncontested in both the primary and the general, most have opposition. I would challenge every one of you, have a conversation with your incumbent House member, your incumbent senator, before Friday, have it before the weekends, and if you hear the right things, then help to give them cover, as has been suggested. If you don't, get to know their opponents and have those same conversations with their opponents in the primary and in the general election. And it's been alluded to, they really don't hear from as many people as we might think. Most of these races will be decided in primaries by fewer than 5,000 people. When you split that in half or whatever the percentages are, the number of people that make the difference in any given legislative race is minimal. And a legislator will tell you that if they hear 5 people talking about an issue, it sounds like 50 to them. And so exercise, you're right, they are generally very receptive to hearing from constituents. And would just challenge all of you, in addition to the associations that many of us represent who have political action committees, we are having these conversations now. We are putting money toward candidates who we determine are more pro-business, or however you define that. Work through your associations for sure, but also exercise your right as individual citizens and voters to engage in those conversations.
I think that's a great point. And so many of these organizations and associations have forums and panel discussions and other things that you can participate in virtually. You might not be able to go to every single thing, but it's such a great opportunity to learn more about these issues and to learn more about the candidates as well. To Bob Morgan, the President and CEO of the South Carolina Chamber of Commerce, Dr. Joey Von Nessen from the Darla Moore School of Business, Scot Slatton from the Municipal Association of South Carolina, Owen McBride from our South Carolina Association of Counties, and Nick Kremydas, CEO of South Carolina Realtors Association. Let's give them all a big round of applause. Thank you, gentlemen. We appreciate your time and expertise. Appreciate you all being with us today.